taken care of, and your financial planning goals are getting achieved over a period of time in a proper manner and in a systematic and a scientific manner. Therefore, you will attain a peace of mind, because if you are on the path of financial planning, the destination of financial peace is not very far away. So this typically ensures that you are worry free on the process of attaining your financial freedom, or attaining your financial planning goals. So what is financial freedom? Financial freedom is freedom from the anxiety or worries of financial achieving your financial goals, and that is what the financial planning leads to. So financial planning, what are the steps to achieve the financial goals? Number one is need for goal discovery. So first of all, we need to define our goals. So this is again a very, very important aspect of financial planning, the process of financial planning, what are the various steps of financial planning. So first of all, the first important aspect is need and goal discovery. हमें ये मालूम होना चाहिए कि हमें जाना कहाँ है, हमें क्या करना है, किस डेस्टिनेशन पे हमें पहुँचना है, हमारे क्या क्या फाइनेंशियल गोल्स हैं. So a financial goal needs to have the following features. The goal should be materialistic and have a monetary value attached to it. क्योंकि हम फाइनेंशियल प्लानिंग की बात कर रहे हैं, तो एक मॉनिटरी वैल्यू होना एक लाजमी है, बहुत ज़रूरी है कि एक मॉनिटरी वैल्यू एक अटैच करना चाहिए. यू शुड हैव अ टारगेट पीरियड विद इन विच यू वांट टू अचीव द गोल. आपके पास कितना समय है उस फाइनेंशियल गोल को अचीव करने का, वो हमारे पास होना चाहिए. एंड द गोल शुड बी रियलिस्टिक. अगर हमें ये भी मालूम होना चाहिए कि हमारे कितना मीन्स है, हम कितना इन्वेस्टमेंट कर सकते हैं, और हमारा गोल हमें कितना रखना चाहिए. तो हम अनरियलिस्टिक गोल्स भी नहीं रख सकते हैं. तो उसी हिसाब से हमें अपने फाइनेंशियल प्लानिंग, अपने गोल्स को पहले डिफ़ाइन करना है. तो गोल्स को डिफ़ाइन करने के लिए एक बहुत इंपॉर्टेंट एक आस्पेक्ट होता है, जो कि इसके अंदर मैं बताना चाहूँगा, विच इज़ द इन्फ्लेशन इम्पैक्ट. लेट अस से फॉर एग्जांपल, आई वांट टू मैरी माय डॉटर टुडे. तो द कॉस्ट लेट्स से विल बी 10 lakhs. नाउ after she attains maturity at the marriageable age, let's say after 25 years, this 10 lakhs will not remain 10 lakhs. This expense in today's way of a marriage cost is 10 lakhs. After 25 years, this cost obviously will attract the inflation impact, and this will move up to say around 20 lakhs. So I need to plan for 20 lakhs for the quality of marriage that I want to do today. So similarly, I have to do plan for the education. Let's say the cost for education today in a decent college is, let's say, 10 lakhs. Now, after the child achieves that stage of going to a college, so at that point of time, 18 years hence or 20 years hence, the cost would not be 10 lakhs. It would increase. So therefore, the goal setting has to be in accordance with the inflation impact. So this inflation impact also has to be factored into it, and that is how we define the goal first. The second is take stock of your finances. So check the following to get a clear picture of where you stand at present, and if you are defining your goals aptly. So आप अपने गोल्स को सही तरीके से डिफाइन कर रहे हैं नहीं, उसके लिए आपको पहले चेक करना पड़ेगा कि आपकी नेटवर्थ क्या है, आपके पास कैश बैलेंसेस कितने हैं, एसेट्स कितने हैं, आपकी आउटस्टैंडिंग लाइबिलिटीज़ कितनी है, आपके पास कोई लोन है जिस लोन को आपने चुकता करना है. तो इस तरीके की चीज़ों को आपने पहले आपने असेस करना है. उसके बाद अंडरस्टैंड हाउ द इन्फ्लेशन वर्क्स, एंड इफ़ यू हैव अकाउंटेड फॉर द प्राइस इंक्रीज वाइल डिफाइनिंग योर गोल्स. सो दीज आर द आस्पेक्ट्स वाइल विच यू हैव टू take a reality check. You have to take stock of your finances, and then only you come to a monthly investable surplus, and accordingly you define your financial or a monthly investment goals. Then the third is execution. ऑब्वियसली आपने अपना गोल सेट कर लिया है, अब आपने अपना रियलिटी चेक कर लिया है, आपने असेसमेंट कर लिया है, अब आपने उसको एग्जीक्यूट कैसे करना है, आपका जो फाइनेंशियल गोल है उसको एग्जीक्यूट करना है. तो इन केस यू आर्ट वेरी savvy in terms of investments, instruments and avenues and plans, it is advisable to seek the assistance of a financial advisor. तो वहाँ पे एक फाइनेंशियल एडवाइज़र की बहुत ज़रूरत होती है. जैसे कि आप मेडिकल अगर मान लीजिए किसी को आपको एडवाइस चाहिए तो आपको एक डॉक्टर की ज़रूरत पड़ती है। इसी तरीके से लीगल अगर एडवाइस चाहिए तो आपको एक लॉयर की ज़रूरत पड़ती है। इसी तरीके से अगर आपको फाइनेंशियल एडवाइस चाहिए तो आपको एक फाइनेंशियल एडवाइज़र की ज़रूरत है। आइडियली वन शुड टेक द हेल्प ऑफ अ फाइनेंशियल एडवाइज़र एंड नॉट risk getting into a financial planning without the help of a professional financial advisor, because he will tell you what are the safe avenues, what are the good avenues, and what are the risk factors. He will also do a risk assessment of yourself. I mean, what is your risk profile? So he will do a risk assessment and accordingly advise you. So accordingly, a financial advisor or a financial planner is very important if you are not yourself fully equipped to do a financial planning for yourself. So financial planning may not always be as straightforward as you may perceive it to be. This may require a thorough understanding of the investor profile, as well as what are the investment instruments or what are the investment avenues which are available. Then ensuring you are on the right track. So monitoring and strategizing is again a very important aspect. So while you have executed it, while your financial planning goals are getting executed, and while you are on the path of your financial planning goals achievement, but on the way, you need to do a risk assessment, you need to monitor your goals, you need to monitor your investments. And while planning and implementation are important aspects, it is equally important to keep a constant check on your portfolio and reassure if it is progressing on the right track, and in case there are interventions which are required, any need of correction is required, that correction should be done on the way. Now coming to what are the various types of investment instruments where you can invest. So broadly, I mean this is not a comprehensive list. Let me come to you very upfront. There are so many investment products and things which are available. But broadly, these are some of the categories of investment products which most of us. These are I'm relating to the financial and the other products like gold and real estate. So you have various category of investment options, which is one, for example, equity or equity mutual fund. Equity I am writing separately as direct investment into stocks or direct investment into shares. So equity or equity mutual funds. So this is again one aspect where equity or equity mutual funds are expected to give superior returns, inflation beating returns, and over the longer period of time. So if your horizon is short, if you are looking for very short term investment, short term gains, that is not the instrument for you. So you should need to have a look at least 3 to 5 years if you want to invest in equity or equity mutual funds. Ideally, my advice, as I have been advising to most of the people and most of the new investors, is not to get into direct stocks, if you are not an expert into it, or if you don't have the time to monitor your stocks. And the monitoring of stocks needs much more time, to monitor them. Otherwise, there is a big chance of burning your hands, and you will probably be ending up making losses. So equity direct investments should be avoided by the new investors and by people who are not really an expert or who do not have the expertise or the time to invest in the stocks directly, but go through then equity mutual fund route. That is advisable. And the next is bonds or debt mutual fund. So direct investment into bonds is also possible. Now the government has opened direct bond access to on a low ticket size investments also. But there are debt mutual funds also which invest in the bonds, and where you can invest in smaller amounts also. So these are relatively less volatile. And again, please note that I am saying less volatile. That does not mean they are not volatile. There is a volatility, and this volatility is linked to some the debt market bond yields. So that is a long subject in itself. So these debt mutual funds are they are volatile, but they are less volatile as compared to equities, and can be utilized for short to medium term investing. So based on the quality or based on the yield or the modified duration of the debt fund. So accordingly, the time horizon for investment also changes. So basically, what I want to say is that you can invest in the debt or debt mutual funds for lower volatility and for a comparatively lesser time period as well. Now the third is the gold. So gold is generally considered as an inflation, mapping and used for to hedge against the within the portfolio and preferred during lack of liquidity and purity and security. So not it is not preferred due to lack of liquidity and purity and security. So these are some this investment option is again an option where this traditionally in India, if you look at the gold investment, so women and they prefer to invest some part of it their money into gold, and this is also considered as a family asset, but also gold is considered auspicious in many aspects. India is one of the largest importers of gold because of the jewelry investments or jewelry buying which happens, and therefore gold is considered as an investment option also. But there is a lack of liquidity, there is a lack of concern on purity, there is a lack of concern on security. So these are some of the aspects we need to consider when we invest in gold. But yes, gold does not give returns on a very regular basis, but there are jumps in between, and overall it has been providing, even if as an investment avenue, it has been providing a conservative kind of a return. Now, next comes the real estate. The real estate, while a popular preference, does not present a strong value given the problems in real estate market, illiquidity, and large ticket value. So in the real estate, we all know that the investment amount is very large ticket. So if you want to buy a house, say 20 lakhs, 50 lakhs, 1 crore, so you need to have a large amount of investment upfront, or you need to take a loan. So you'll be incurring a monthly EMI for the loan repayment. So this is large ticket value. Second, it is very illiquid. And then there are also maintenance costs. There are real estate maintenance costs because, otherwise, there are society fees, society maintenance charges, etc., etc. So then this is again one of the investment avenues which gives good capital gains. It can give you rental income. So this is one of the avenues which is also can be made a part of the investment portfolio or the financial planning portfolio. So this is again one of the instruments. Fixed deposits. Now, fixed deposits are again preferred for short-term savings. Should not be considered as long-term investment avenue due to lack of inflation-beating returns. So typically, if you look at it, the returns on the fixed deposits is about 5.5%, 6% for a good bank fixed deposit for 3 years, 5 years. So these fixed deposit, fixed income instruments, they are not so tax efficient. So there are, of course, ATC benefit giving 5-year fixed deposits as well, but most of the time these are all the income or the interest income on the fixed deposit gets added to your income, and they are maybe not very tax efficient, but yes, they are a safe instrument. So most of the bank FDs are considered very safe, very liquid. So therefore one can invest in the fixed deposits looking at the liquidity, the safety, and the returns which are assured returns. And therefore this is again one of the instruments which is preferred, which is one of the most popular instruments for investment in India. And but they are not very tax efficient, and also the real return on fixed deposits is highly doubtful, because usually the inflation or the return on the fixed deposits is almost matching, and therefore the real return may not be a positive return on the fixed deposits. Now, one of the again key aspects of financial planning is asset allocation. Now, asset allocation, as I have said, there are various types of assets you can invest in, which is equity or fixed income assets, or you can invest in real estate, or you can invest in gold. So these are many of the instruments. So I'll just give you a small little illustration about what is the impact of asset allocation over the years, and how it helps in creating a long-term wealth creation. So just to give you an example, so equity returns are assumed at around 12%, and the fixed income or deposit